From Profit Point NG, this is TFX. Taking a look at the WTI-Crude oil for last week, we have this pullback mentioned in my previous video for the last 2 weeks that I'm going to be interested in buying crude oil when it has taken a significant pullback, right? Okay, so last week we have this pullback here, right, that took the crude oil to this present level where it is now. So we'll be interested in buying this crude oil future here at this key level. We're back here, right, which correspond to the 3881 mark. Okay, the reason is that these are two levels here that are dated back to 10th of June and the 30th of June 2020. So I think this pullback is a significant one here, and then it is much likely that it's going to pull back to the 3881 mark, at least 3881 mark here, right? At that point we might see a pullback, right, to this level here. So unable to break above this level here, then we can expect a bounce back, right, to the 35.99 mark. At that point, I'm going to be very much interested in buying crude oil, simply for the fact that this seems to be a very strong benchmark here, right, which correspond to a kind of break-even production level. So these are the places where I'm going to be willing to be very strongly bullish, right, on crude oil. Okay, that said, I want to support this opinion with the following, right, that I've been seeing on a very long time frame here. We're gonna see this now, right? We have this interesting trend line here dated back to September 2013, right, retested June 2014, and since that time we had this heavy crash, right, that took crude oil to this level, only to retest, right, September 2018, and then we saw an attempt 2019, right, which were not successful, but then another attempt which really touched the trend line January 2020, before this pandemic, right, affected the price of crude oil as a result of the slowdown in the economy and lockdowns. All right, so sincerely for me, I think after this pullback that started last week, which might persist for a couple of weeks, I believe that this crude oil, after this pullback here, we should see something like this, right? So it's not going to be surprising that for this very year that we can see crude oil rally into $50 to $50 region, right, which will correspond to this support level here, right, which dated back to early this year. Last week I added the S&P 500 to my weekly analysis, and simply for the fact that I wanted to give the insights on the fact that S&P 500 have been consistently breaking new highs, and I wanted traders to be conscious, right, of what might happen next. So I mentioned last week that we are going to see some level of pullback in S&P 500, and I mentioned that for this we are looking into a pullback to retest this February's high, right, which I mentioned last week. So what we saw is that a crash from this high level here back, right, exactly what we discussed, into the February's high, which is 3,400 region. Okay, so what we're expecting now is this new week coming here, depending on the open price for Monday, right, which are going to be discussed in more details in the group there. We can see that this rally here is not going to be a one-day rally, so we expect a slight bounce back, right, to this level here, right, and then a continuation of this rally to the 3,200 region. At that point, I believe that the EMA should have appeared somewhere there, right, in order to continue, right, the rally. Alternatively, if it breaks and crash below the EMA there, then we should see S&P 500 rally into the 3,000 region. I believe that level of 3,000 mark will be cleanly defended by the tech companies. So at that point, what I'm going to be waiting for is to just wait and watch and see if it's able to break below 3,000. But in my opinion, I think it should. It's a rounded figure, so it shouldn't. You wouldn't want to break below 3,000. And at that point, it's a place where I can now resume my bullish bias. Gold. We've seen consistently gold find it difficult to break above this trend line, right, that is found itself for some days. And so we've seen lower highs, right, lower high, lower high, lower high, lower high, right, but then so far we've not seen a lower low, right. So we still have this wedge pattern, intact, sustained. And then to me, I believe the 1900 region is still acting as support here, right, but it's not going to be surprising that we can see a break of that support level here into the 1800 region, right, and then from that point there we can resume our bullish bias on the gold. Another way to look at this is, what if it doesn't go right to 1800 region? What if it doesn't go to retest 1800 region? Okay, so and then you want to start buying up from this 1900 region, then there's no problem buying up from here, and then a break of that level, right, you can still buy more. So we have this entry level one here, right, and then we can have entry level 2 here, right, to resume the ultimate uptrend, right. Okay, GBP USD. So we've seen GU trading essentially above this trend line that we have here, right, and then we've seen sustained close above that now, right, for last month, right, of August. Okay, and we've also seen for the new month that just started that a pullback has taken place, as you can see on a 4-hour chart here, where we've seen it trying to approach the 135 mark, right, that we mentioned, right, and then what we saw is a pullback right into the 131 mark, and then I think, in my opinion, that the GU has now established that place as a strong support, right? We can see that place acted as a resistance back here, and here, and then and then acting as a support here where it's unable to close below that level. So this asset now have started its movement up back here. So having established this as its bottom here, so we should see a rally into the 135 region, right, in the upcoming week. A break above the 135 mark here, right, you see G rally into the mid 136 region, which corresponds to June 2017's high there, right, and then afterwards we should see it go into the 140 region. All right, USDCAD, we've seen a test of July last year's low, October last year's low, and then January low for this year. I did mention that the bulls will want to defend the 130 mark, right? So I said the bulls will want to defend the 130 mark right here, right, which is what they've done, as we saw just last week, where it moved, right, retraced back there, but found a resistance at that point, and then it's back to that region. The reason being that we've had a weekly close here below the EMA here, right? So we've had a week that closed right below this EMA, right? In fact, 2 weeks now that have closed below the EMA. We had 1 week here that closed below it, and we had another week here that have closed below the EMA. So as a result of that, it's not going to be surprising, also in view of the weakness in dollar, right? That's not going to be surprising that we can see USDCAD trade further down, right? And the key levels to watch will be is April 2014's low there and September 2016's low, right? Which by then, right, will have taken USDCAD into the 125 region. All right, TFX at profit point, and I believe you gained 1 or 2 things from this video. For deeper insight on how I trade price actions, or for trading alerts that can give you guaranteed profits on a daily basis, you can chat me up on WhatsApp on the number shown on the screen. Thanks for watching, and I'll see you next week. Bye for now.